The Financial Huddle does not provide tax, legal, financial, or other professional advice. Listeners are encouraged to consult with their own advisors in these areas.
All right, everybody, huddle up. The play calls in. This is the Financial Huddle. Ready, break.
Well, hello, everybody. Welcome back to the Huddle Nation here. Ryan Fleming, Ed B. Miller, Brian Manier.
What's up?
Hey, guys.
Welcome, everybody.
Yeah. So whether you're driving down the road listening to us or watching us on YouTube, glad that you're joining us today. We're going to talk about something that's been in action for just a couple months here. It's the One Big Beautiful Bill.
OB3.
Oh, OB3. Kind of sounds like a Star Wars character.
Not the Better Business Bureau. It's actually significant legislation that just passed.
That's right. And, man, there's a lot to unpack in this bill. And we're going to do a two-part series today. We're going to do our best to talk about a few things centered around things like, are your tips for free? Are your Social Security payments now tax-free? And overtime. You know, what's the deal with that? So we're going to do our best to unpack that a little bit and get into the weeds on this. And tune back in for part two. We're going to cover some more
All
stuff.
tax-free, right?
Apparently, that's what it is.
Yeah. So
I know there's a lot of noise out there. And I know that, you talk to a lot of people. But this got me thinking, we go to a lot of sports games. And, Blue Jackets games, Buckeyes games.
Go Bucks.
Yeah. So how do you guys feel? This is like a moral dilemma. You go, you buy a beer. It's $22 nowadays. You're there. You drove there. You parked and paid $25. You buy the beer for $22, and the lady flips the screen around and says, "Do you want a tip?" So
not only do you want a tip,
do you tip?
There's options.
Yeah.
Several.
18, 20, 25%.
Yeah. They don't start at 5% either. If you look at those tips, I mean, it may start at 15%.
Right.
It's unbelievable.
It's pressure.
Yeah. It's interesting because if I'm paying $20 for a beer, my tip's included in that. All right. I'm that $20 is for the whole ambiance, the setting, the event, because I already paid, Blue Jackets. I mean, you can pay $125, $150 for lower bowl.
It's the ambiance of the plastic cup.
Yeah.
It's a social and moral dilemma, to say the least.
Yes.
But, whether or not you're a tipper or not a tipper in that situation, we're not here to judge that. And please don't judge us. But, I just thought that was kind of interesting because it's everywhere. So
it's a lot of pressure.
Well,
there is a lot of pressure.
And it even goes even further. I mean, we go out often and get something a quick bite to eat for lunch. And, there's a Subway, which we all know right across from our office. And, Subway is definitely, I wouldn't consider maybe, high quality. You go in there, it takes about hopefully 2 minutes and you get your sandwich. And then I give them my card and I look down. And once again, it's like everyone expects a tip nowadays and the pressure, is on you. And I'm like, all right, I got a 6-inch sub and a bag of chips for $5. And, they want to know if I want to tip 20%. So there's definitely certain things. I tip for service, right?
Yeah.
And I'm not saying, we're not cheap. Tips are not bad, but it's meant to reward
above and beyond
service.
There is a way around it if you don't want that pressure. Take cash with you. Then they can't ask that question.
That's true. They can't.
That's right.
Okay, we digress. So, anyways, relative to this big, beautiful bill and this idea of overtime, tips being tax-free, and Social Security, I get that a lot. And I know you work specifically with a lot of Social Security people, a lot of families getting ready to take that, when to take it. So, maybe just what's the noise going on about this? I mean, I get this a lot. I know you get it like every week.
Yeah, if I'm teaching a class on Social Security or somebody comes in and they just want to meet with me to talk about it, almost always it's, I heard that Social Security is tax-free.
Yeah.
Is that true? Right?
Yeah.
And there's a lot of noise. So we know that when President Trump campaigned last fall, what was the promise that he was going to make? We're going to take away tax on Social Security. We're going to take away tax on tips. We're going to take away taxes on overtime. Mm-hmm. And so a lot of people are thinking, this one big, beautiful bill, or the OB3, when it was passed, it accomplished all that. It's obviously what we want to talk about today.
There's some quotes on that.
Oh, there's some quotes. Yeah. So if you look at, this was a White House press release, and they claim delivering and this is referring to the One Big Beautiful Bill, and they're saying delivering no taxes on Social Security through the One Big Beautiful Bill.
Quote.
There was actually an email from the Social Security Administration, and in that, I guess it's a controversial email now, was reported to have stated the new law eliminates federal income taxes on Social Security benefits for most beneficiaries.
Yeah, and you can see why that just raises so much noise and misinformation that's out there, and it's prevalent, and maybe our listeners are wondering that as well too. That's why we wanted to talk about it. So, let's clarify some things.
Yeah.
Like what is really happening with tips over time and Social Security.
And this is a lot of, why we started this podcast. If we go back and remember the whole financial literacy and bringing clarity to maybe not necessarily misinformation, but, in this case, statements and noise that's out there that just isn't factual, isn't real.
And this is super current events. I mean, this is going on right now.
This is going on. A lot of people, I met with a client just, a day or so ago who we were looking at retirement income and distribution planning. And then, I asked what their Social Security benefits were. And they're like, well, those are tax-free, so we don't have to worry about those. I said, no, they're not. And they're like, oh, yeah, the big, beautiful bill passed and everything's tax-free now.
Right.
I'm like, no, it isn't.
Right.
So, we have a special.
Stat time. Hold on now.
Yep.
This is important. It's stat time.
Stat time.
You're the stat guy this week.
Today, I get the privilege of being stat guy. So
tune us up.
Yeah, specifically with the topics that we're covering today, which really is dealing with what? Tips, overtime, and kind of Social Security. Well, it's not really Social Security, so that's the first kind of misnomer out there. It's a senior benefit, which means 65 and older. The next thing across all of these, it's a temporary benefit, meaning 3 years. It expires in 2008. And
2028.
28 instead of 2008. We're not going back to the future. But when we're looking at tip income, effectively, all these things are increases to deductions. It's not tax-free income. It just allows you, when you are filing your taxes, to increase your deductions, which obviously will offset earned income and taxable income. So as far as the tips is concerned, it's the maximum, the cap is $25,000 per year for qualified, tips, and that is per individual. It gets into a little more complicated matters when you're talking about filing jointly, but the income phase out per individual is $150,000. Joint's supposed to be $300,000. And when we look into overtime comp, very similar to the tip, it's $25,000 is the cap. Income limits are the same. Phase out on individuals is $150,000. Joint is the $300,000. Now when we go down to what we're referring to as Social Security taxable, it's actually senior benefit, and that has nothing to do with Social Security. If you are 65 and older, basically you qualify for an additional $6,000 deduction singly, $12,000 filing joint. So once again, all these things are really meant to lower your taxable income, hopefully put more money in your pocket. And not just these three topics, but when we look at itemized deductions, and we look at standard deductions. So not all of us, wait tables or are in some service area where we're receiving tips. Not all of us work overtime. And obviously not all of us are 65 and older. So if we even look at the standard deductions as part of the big, beautiful bill, standard deductions have gone up also. If you're looking at the individual standard deduction, it went from $15,000 to $15,750. Joint went from $30K up to $31,500. So that benefits everyone. That's a standard deduction. And adding on to this senior deduction that I talked about, $6,000, there's an additional $1,600 per year per individual for all seniors.
That just happens normally.
Yep,
right?
It just happens. And then we also have head of household filings, not single, not joint. And that's another deduction that also is enjoying that increase, going from $22,500 to $23,625. So the facts are, these are deductions. There's no such thing, and we've all heard this before, no such thing as a free lunch, right? There is no free money, from that standpoint. Now, it's better than nothing, meaning it's better than what existed before in our deductions. And at the end of the day, we want to tie this back to So I'm going to ask you, Ryan, back to you.
Yeah.
What does this mean for our clients?
Yes. What I'm
types
hearing
of
is,
things-
well, a couple things. One is if you want more crystal clear clarification on this, and you're listening to this or watching this, this is where you need to talk to a qualified CPA. Okay, I mean we're not CPAs, we're not attorneys and everything, but to do the math right and understand what this truly means for you, make sure you talk to a qualified CPA. You know, we have a few. If you're looking for somebody, we can maybe get you in touch with. But really, at the heart of this, Brian, what I'm hearing is this is going to put more money in our pocketbooks, more money in our bank accounts, and we need to be mindful of that as advisors to make sure that we're coaching our clients to, you know, make sure that doesn't get absorbed into their lifestyle, which is so easy to do. Okay, and so I think the heart of the bill was, and these changes was to put more people in a position where they have more money at the end of the year through these mathematical deductions. Okay, and so if that's what's going to happen, then this provides a planning opportunity for so many people. So let me speak to that, because this is where we need to come in and coach people along the way. They don't understand the math, they don't understand the rigmarole that's going on, but we that's our job to do that. So if people are going to get more money, what I mean,
Yeah, and to Ed's point, I mean, if you don't get tips, if you don't get overtime, if you're not 65, you still have that opportunity to utilize the standard deduction, and that was made permanent. Mm-hmm. Now, before I get into how this can benefit people and what they should do, you do have to understand the rules of this. And as Ed mentioned, all three of these are going to expire in 2028. So you have a limited time to take advantage of these extra deductions if you fit into those categories, especially the senior deduction. Now, the $1,600 per person, that one is not going to phase out, and that one does not have an income limit, whereas the $6,000 per person, that one does. And that's why it gets confusing, because the rules change depending on which one you're talking about. But with these extra deductions, hopefully what that means is it would essentially lower your taxes, which means you should have more money if you're not paying that in taxes. So what do you do with that? Now, what is our natural tendency as humans to do?
Spend it.
Spend what we got.
Spend what we got, right? Or spend even a little more than what we got sometimes. So if you're disciplined and you know what that standard deduction can do, well, that was an opportunity. Hey, maybe I need to make up some of the savings that I didn't have. Maybe it's I need to make up and save towards some of my retirement plans that I wasn't doing a good job before, and I can put some of that. Maybe it's an opportunity to give a little bit more. Maybe it's an opportunity to be very active, take an active approach on some of the tax management strategies that we talk about when we work with our clients all the time. So the point is utilizing these extra deductions, meaning hopefully more cash flow opportunity for you, and being able to utilize that to optimize your overall financial outlay.
One other thing I'd add to that too, so if less people or more people are paying less tax on their Social Security, that's a good thing, because then that means they don't have to dip into their other assets.
That's right.
Which means that their money's going to last longer, right? So there's that byproduct as well too.
One clarification thing too, just to make sure, these additional deductions only impact federal income.
That's right.
Does not impact FICA, doesn't impact state, those types of things. So that's something that, once again, this is getting into the weeds where speaking to a certified public accountant, the person that does your tax returns is important. We can give information, but we don't, we are not licensed to do that stuff, and that's why we work with those types of folks.
For sure. So I really think that's really what I want to get into today. We want to be concise with our communication, and like I said, we're going to do a 2-part series on this. Again, if this is information that has been on your heart and mind, come see us. Schedule a meeting to come see us. Part 2, what we're going to do is we're going to get into a little bit more about in the big beautiful bill. We're going to talk about things like these permanent brackets. That was a big surprise. We thought that the brackets were going to sunset, but the verbiage that they're using now is that these are permanent. I think they're going to be a temporary permanent, but we'll talk about that as part of the
permanent until they change.
Yeah,
right.
I always say air quotes permanent.
Permanent.
Yeah, right.
We're going to talk a lot about that in part 2 underneath the big beautiful bill. We're going to talk about these increased standard deductions for everybody. Kind of hit upon that a little bit more than what we did today. And we're going to talk about the SALT, and we're going to talk about the caps on the SALT and the phase out on the SALT tax. So So tune in next time for that.
A lot of good info to come.
A lot of good info to come on this big, beautiful bill. Super relevant, super timely, current events. And again, as always, everybody, thanks for tuning in. Come back and join us on Huddle Nation Part 2 next time. Take care.
Take care, everybody.